Hello everyone, welcome to the Ichimoku charts.com daily analysis for lights of crude oil for Tuesday, July 16th, 2013. Well, a continuation of the trend to the upside today in a candle that's made another higher high and a higher low. This first time frame uptrend has been in force for quite some time, and since late June, and we had the breakout up above the Ichimoku indicators and a very strong first time frame uptrend that took out the round number $100 level and has proceeded to trade up to a very important zone of resistance. We have the market interacting now for the second time in the past 4 days at the zone of resistance that extends from 106.95 up to about the 108.70 level, and that is a very solid zone that has held previously. There was quite strong price rejection from there in the past, not recently but a fair time ago, but it was significant. The market now also has potential to find support around the 105.31 level, and that's what we saw with the previous day's trading. We saw the market test down below there and be rejected from there. For today's trading, the buyers have not supported the trend to the upside, and that does suggest that there is potential for a change of trend. But if you look back 4 candles, we had another black body candle where the sellers closed with control, but the buyers were so strong in this market that they weren't able to change that first time frame trend to down. So there is a possibility of that happening today. But if we look at this current candle as it's developing, the market has now tested down below the low of that current candle, and there is a possibility of the market making a lower high and a lower low. We don't actually know until that market finishes trading. The buyers could come in and rally the market up above the high of the current candle for an outside day, so let's be aware of that. But the sellers have closed with control as opposed to the buyers for the previous 2 trading days, and it does suggest, combined with the buyers losing commitment above the 106.95 level, that there is potential for the market to trade lower. Now, if the market does trade in a bearish manner down through the 105.31 level, we do have potential for strong support at the Tenkan-sen that's trading at 104.08, and then down below there a previous level at 103.39. If the market can trade through there in a bearish manner, we don't have any solid support until the market trades back down to around the 100 level, and by the way, the Kijun-sen is now trading around that level. So that will strengthen the $100 level as strong resistance or support, and we expect it to be strong support anyway. Now, in terms of the Fibonacci extension, and we're examining the relationship of this current strong first time frame uptrend that the market's in, comparing it to the previous time the market's trending up, and we've seen the market trade in a bullish manner over the 261.8%, almost trading to the 423.6%, and the market now entering into some sort of a congestion area. There is a possibility of this turning into some sort of a triangle if we do see the market form a peak here at this level. So let's be aware of that. Could be a descending triangle, but we haven't had enough formation of it yet for us to draw the boundaries, but we may have a look at that over the next day or two. The likelihood of the market testing up to 423.6% at the moment is not strong. It depends on whether we see the buyers coming back in around these levels and the market breaking up above the barrier, the top barrier, but it is a level that we should be looking for. It's unlikely that the market will trade substantially above that. Markets don't tend to trade beyond the 423.6%. It is a very strong indication of the strength of the buyers in this market that we have traded through the 161.8% and the 261.8%. But at the moment, that is our target up there. If we do see the buyers come back into this market, it's at 108.51. In terms of the Fibonacci retracement, and this is really tells us something about the strength of the buyers. Trading in a bullish manner above the 161.8%, the 261.8%, and the 423.6. And as I've mentioned, not too often do we see markets trading above the 423.6. That's possibly why we're seeing this congestion area. We're not seeing the dynamic trend that we saw in the past when the market was trading below there. We do have a target at the 685.4% level up at 110.75, and that 110 level coincides with that strong area of resistance. So let's be aware of that. That is an area that we probably will see selling coming in if the market does trade up above there. So what we should be looking for is a breach above the highs here, this strong price rejection above this 107.745 level. If we see strong bullish activity up above there, we could see the market trading higher, and even if it's a strong bullish candle, even trading up to the 110 level. But certainly the level around the 104.23 level, where we saw strong support coming in, will be very, very solid support, coinciding with the area around the Tenkan-sen at 104. If we see some bearish activity down below there, we could see the market trading. But in terms of Ichimoku, now a very strong market in all three time frames. Previously we saw a bullish breakout up above the cloud. We saw the cloud acting as support, and this shows how well the cloud can act as support here on 1, 2, 3 occasions when the market's sold off. We saw the cloud acting as support, and now we are trading a fair way up above the cloud, and it does suggest that the market is looking a little bit overextended. The market's also trading above the Kijun-sen, so we're bullish in that medium-term time frame as well as the long-term time frame, but that Kijun-sen is pointing flat, and we normally expect price action to be attracted back towards a flat Kijun-sen, and that does raise some doubt about whether we will see a retracement, because the market had the opportunity to sell off and retrace back towards a flat Kijun-sen, but it really didn't do a good job of it. We didn't see the trend in that first time frame change to down, and we saw a mixture of black and white body candles, and this does suggest that the buyers are still very, very strong in this market, and there could be a possibility of a breakout to the upside. In terms of the Tenkan-sen, the green indicator here, the market's trading up above that indicator and suggests that the market is bullish in that fast-term time frame, that short-term time frame, and the Chikou span here is above the corresponding price action, so it's confirming the bullishness that we're seeing in all three time frames, and suggesting that if we do see the market retrace, we should see the market find support at one of these levels, and the buyers to come back into this market to test to higher levels. So basically, let's watch for a test up above the 106.95 level, remembering there is a large zone of resistance. Bullish breakout above there could quickly see the market testing to the 110 area, but also we have strong support down around 105.31, around the 104 level as well, and then if we break it down below the 103.39 level, we could see the market testing back to the 100 level. But the bullishness does suggest that this congestion area may see the market break out to the upside and test to higher levels.